Hello everyone, and today I want to show you the Vortex strategy and break down how this indicator can be used in real trading. In this video we are not just going to go through dry theory. Instead, I will show you how the logic behind Vortex works in practice, what I pay attention to before entering trade, and which moments look the strongest to me. We will also break down 4 successful trades from the platform, so you can see how the strategy reads in a real market, not just on a perfect screenshots. And to explain it as simply as possible, Vortex is an indicator that helps evaluate the direction of the current move and shows which side of the market looks stronger at the moment. It consists of 2 lines, and the way they behave can help you spot when momentum is starting to build, when one side is gaining the advantage, and when the market may be shifting from one phase to another. That's what makes Vortex interesting. It helps you do more than just look at candles. It helps you better understand the market's actual dynamics. And the main idea behind the Vortex strategy is not to open a trade on every line crossover. The real point is this: we look at whether the indicator is actually showing a shift in strength and whether that is confirmed by the chart itself. If one line starts clearly taking control and price is moving in the same direction at the same time, the signal becomes much more convincing. So in this strategy, Vortex is not a standalone push button entry tool. It's an indicator that helps you better spot the moment when the market starts behaving in a more defined way. Hello everyone, today we will be conducting trading sessions using the Vortex trading format. This format is located at the bottom right here. In general, how this format works: we have 2 lines, a green line and red line. The green line represents upward movement, the red line represents downward movement. That is, the green line represents bulls and the red line represents bears. I want to immediately point out why I opened this trade upward right away, without analysis, without any checking. Why did I open upward? Because I saw that the green line was crossing the red line. Generally, this is how the indicator works. We look at line crossings. When the red line crosses the green one from top to bottom, this is the key point, from top to bottom, we open a sell trade. When the green line crosses the red one from top to bottom, we open a buy trade. As you can see, I immediately open a buy trade even before finishing speaking, because I saw that the green line crossed the red one from top to bottom, as I said. As a result, we take profit. We take a confident profit on this chart. That's it, the first trade is completed even without any serious analysis. We didn't analyze the whole market, we didn't analyze trends, whether it was going down or up. We saw it and took profit. It's a very simple and easy indicator. So the first trade came at the moment when the Vortex lines showed a clear reversal into a new move, while price had already started coming out of its weaker phase. So what mattered here was not just the crossover itself, but the overall context. The market was already showing signs that it was ready to move, and the indicator confirmed it. And that made the entry look not random, but fully justified. Here Vortex helped show that the market didn't just make a quick jump, it was actually starting to shift into a new move. So the second trade using the Vortex format, as I already said, it's a very simple indicator. The main thing is to know how to use it at the right time. And overall, if you want, it would of course be good to look at and analyze the market. What do you see now? On the market, we see that bears are controlling it, because the line, the indicator is above the red indicator. Now, as soon as the line crosses, we will open a sell trade. We open a sell trade because the red line crossed the chart from top to bottom, as I said before. When it crosses from top to bottom, we open a trade downward. And overall, what was showing us that the chart will go down, it's definitely this pattern, this bearish trend. We have consecutive red candles, not lines but candles without wicks. Strong candles that show that the market will go down. And this is exactly what is happening. The market is going down now and the decline will continue. Buyers are giving up positions, sellers are taking control, and we take the market. We take this profit. The indicator lines started aligning in the right direction, but price didn't immediately give a clear confirmation. And that's exactly why patience made it possible to wait for a much cleaner entry. These moments are especially useful because they show that the strategy works better when the decision is made calmly, not on the very first move. So we continue our trading, the third trade. We open a currency pair and look at the movement of the indicator. We see that the green line crosses the red one from top to bottom. Then the red one also crosses from top to bottom. In fact, it's very unclear what is happening on the market right now, some kind of confusion and some kind of chaos. So therefore it's better to just sit, wait and analyze the market. What is actually happening overall in the market, and then enter the market with a clear mind and take your profit. We can now conclude that bulls are dominating the market, dominating very strongly, but I think that soon everything will change and everything will return to normal. As we can see now, the lines will start to narrow. This works in our favor, of course, because we trade using the indicator, not patterns. We wait until the indicator gives us a good signal, a good entry point. We will enter and take profit. If we analyze the market overall, we only see an uptrend, then a small pullback, and most likely the market will continue to grow and grow. Now we see that the green line will cross the red one, so we immediately open a buy trade. Here the green line crosses the red one, and we see a suitable trend. As I said earlier, the market is growing, then a small pullback in this area, and the market will continue to grow. That is exactly what is happening now. We open the trade, it's currently going into profit. Also, what signaled this were these candles, the strongest candles, the largest candles with the minimal wicks. This means it's a strong candle that shows the market will grow and the trend will continue. And as I said, we confidently take profit. Yes, not 92%, but trading pairs with 80+% performance show very good results. You can earn well on them and you can also learn. In this trade, Vortex didn't just give a signal, it helped separate a stronger move from normal market noise. Today is the last trade for today using the Vortex format. As I already said, it's a very clear and convenient trading format. Right now, without analyzing the market, we could have entered if the line had crossed the green one from top to bottom. Now let's analyze the chart. On the chart we see an uptrend continuously growing, then a pullback, another pullback, and most likely there will be a third pullback, because one peak, two peaks, that means the third peak will be somewhere here. In fact, we could even enter a sell trade without waiting for the indicator, which is also signaled by these three candles. Bearish candles, more precisely 3 white soldiers, as they are also called, but for a bearish market which show a confident decline and a strong dominance of bears in the market. As I said, the peak will be formed here. We see one peak, we see two peaks, we see three peaks, and most likely the market will continue to fall and consolidate. So as you can see, the trading format doesn't always show us when to enter the market. This time the indicator did not give a crossover, but since we see strong entry signals, we take the trade with profit. We take $92 net. 4 entries, 4 wins, everything exactly as in the textbook. Everything here looked well aligned. Price was moving with clear logic. The Vortex lines supported that direction, and because of that, the entry felt calm and technically clear. When the indicator and price are not fighting each other, the entry point becomes much easier to read. So to sum it up, the Vortex strategy can be very useful for traders who want to better understand market direction and see which side is gaining the advantage in the moment. This indicator helps you spot shifts in strength, the appearance of clear direction, confirmation of the current move, and moments where an entry becomes more justified. In this video, we broke down 4 successful trades from the platform, and these examples clearly show that Vortex works best when it is read together with the chart and not separately from it. If you learn to notice line crossovers, one side gaining strength, price confirmation, and avoid rushing into entries, then the Vortex strategy can become a strong part of your trading system. If you found this video helpful, leave a like and let me know in the comments if you would like me to break down another strategy in the next video with real trade examples directly from the platform. Subscribe to the channel and wishing you all successful trades!